Welcome. We're breaking down Tencent's third quarter 2025 results, and the data points to a really crucial shift in the company's growth profile. So today, we're going to dig into the numbers to understand exactly what this structural change is, and more importantly, what's driving it.
All right, let's start with the core thesis right up front. The key takeaway from this quarter's results is a fundamental shift towards higher quality growth. The primary catalyst here is artificial intelligence, which has clearly transitioned from a cost center into a core profit engine. And we can see this confirmed in two key areas: structural margin expansion across the board, and very robust free cash flow generation that validates the quality of these earnings.
Okay, here's our roadmap. We'll start with the top-line financials, deconstruct the growth engines, put the AI catalyst under the microscope, assess the company's financial health and cash flow, and then tie it all together with the key takeaways. All right, let's begin with the headline numbers for Q3. Now, what's immediately interesting here is the divergence. You can see that total revenue grew by 15%, but look at the non-IFRS profit. It grew faster at 18% year over year. This delta, where profitability outpaces top-line growth, is a key indicator of improving operational quality and efficiency.
And this table illustrates that point perfectly. Gross profit grew a very robust 22%, which led to a significant gross margin expansion of 330 basis points, bringing it to 56.4%. That's a substantial improvement. So this brings us to the crucial question: where exactly is this higher quality growth coming from within the business?
So let's move on to the segment breakdown. We need to pinpoint the specific sources of both revenue growth and, more importantly, that margin expansion we just saw. So this chart gives us the revenue mix. As you can see, value-added services, which includes gaming and social networks, still makes up the largest contribution at 50%. But to really understand the growth story here, the revenue mix itself isn't enough. We need to look at the individual growth rates.
And here the narrative becomes much clearer. The marketing services segment, that is, advertising, is the clear standout, growing at 21% year over year. That's significantly faster than the other segments.
This leads us to the most important question. Is this fast growth also high-quality growth?
The data here confirms it. While all segments saw margin improvement, the critical point is in the fastest-growing segment, marketing services. Its gross margin expanded by a substantial 400 basis points to 57%. This combination of being the fastest-growing segment while also delivering significant margin expansion is the primary engine behind the company's overall improvement in profit quality.
So what's powering this high-margin growth in advertising? The reports point directly to the company's strategic investments in AI.
The company is very explicit about this in its report. They state that AI is driving higher eCPM. So let's unpack what that means. Right, so eCPM, or effective cost per mil, is the revenue generated for every 1,000 ad impressions. A rising eCPM is significant because it means advertisers are willing to pay more. Why? Because the ads are more effective. They're reaching the right audience and generating a better return on investment for the advertiser.
And this creates a powerful positive feedback loop, or a flywheel. First, the AI models enhance the ad tools for targeting, bidding, and optimization. This, in turn, improves the return on investment for advertisers. And because their campaigns are more effective, Tencent can then command a higher price for its ad inventory, driving up that eCPM. This is how that investment in AI translates directly into high-quality revenue. Okay, but high-quality profit growth needs to be sustainable. It has to be backed by a strong financial foundation. So let's verify this by looking at the balance sheet and the cash flow statement. Now, a DuPont analysis is a great way to deconstruct the return on equity. And what's crucial here is the equity multiplier, which is a measure of financial leverage. You can see it has steadily decreased. This tells us that the company's profitability is being driven by operational efficiency, not by taking on more debt. From a financial health perspective, this is a very strong signal. And the second piece of verification comes from cash flow. In the third quarter alone, the company generated 58.5 billion RMB in free cash flow. A figure of this magnitude demonstrates that the reported profits are translating directly into real cash. This level of cash generation provides more than enough capacity to cover the capital expenditures for AI development, while also funding the company's very substantial share repurchase program. Okay, let's synthesize the core findings from this quarter's results. So, to summarize our analysis, first, we're seeing a true structural shift, with profit growth sustainably outpacing revenue growth. Second,
AI is the clear engine here. It's no longer a future concept, but a present-day driver of high-margin revenue. Third, this has led to confirmed margin expansion across the business. And finally, the company's financial position is a fortress, with declining leverage and massive free cash flow generation underscoring the quality and sustainability of these results.
And this analysis leaves us with a forward-looking strategic question. The successful monetization of AI clearly marks a significant evolution for the company. So the key issue going forward will be how Tencent balances and integrates these powerful new technology platforms with its vast established content and social ecosystems. That balance will be critical to watch.